Cost Live. I'm Vanessa Collette here at the Canadian Investor Conference, Toronto. I'm very happy to be joined by Rolly Uloth, the President and CEO of Wesdome Gold Mines. Welcome, Rolly. Great to have you here.
Well, thank you, Vanessa. Thank you for asking us.
Now, Rolly, you've had a big turnaround at the company, and you've managed to swing to profitability in 2014. What's happened in the last year?
Well, what's happened in the last year, there was going back a year ago, there was some shareholder unhappiness, and it caused a change in the board at the end of August last year. So the board changed at the end of August last year. I rejoined the company after being away for some 4 years, and we reconstituted a new management team and continued the vision I left almost 5 years prior.
And so you've had a turnaround on the operational level and the executive level.
That's correct.
And you have a bit of a mix of the new team and the old team currently?
That's correct.
Okay.
That's correct. Our COO, Philip Ng, joined the company just prior to me in July. And I also, in February, brought back my former COO, who's a master planner, to assist Philip and the rest of the team and go forward part of the business. And Lindsay Dunlop just recently joined us as our VP of IR. We continue with George Maynard, who was our VP of Geology for many years. Mm-hmm. And a lot of the operating people at the Eagle River Mine at Wall, Ontario are still there from my prior journey. So it was very encouraging.
Your philosophy is about building a great team. So you feel pretty good about the team at the moment?
I feel very good about the team. I'm a strong believer in teams, and teams win games.
Right, absolutely. Team of A players. Now, Eagle River produced between 15 and 20% more gold than in 2013. How did you accomplish that?
Right. Well, the production was a number of things. First of all, the mill, when we rejoined the company a year ago, was only running at 400 tons a day. It currently is running at about 700 tons a day, on its way to 1,000 tons a day by December of this year. So that in itself added a great deal of additional production because we had the throughput. We were more efficient in the mine and certain of our mining methods and all that to extract higher grade ore as well. With Benoit rejoining the team with his planning, we were able to be directed where we should have been other times.
So operational efficiency, getting the mill up to its not full capacity, but on its way there.
That's correct. Its full capacity is 1,200 tons. We may get there, but I didn't want to tell you that.
Right. Now, you also reduced your cash cost, an average of $859 an ounce?
It's around $859 an ounce currently, yes. And
how did you manage to do that?
Well, that's again goes back to the prior answer almost. The mill costs about $1 million a month to run, so obviously the more you put through, the cheaper the unit cost gets. Right. The higher grade also contributed to helping lower those overall costs as well.
So you have pretty high grade on site?
Yeah, in the last quarter we were averaging around 11 grams a ton.
Okay. It's pretty consistent.
The historic is over 20 years is just short of 10 grams a ton, 9.5 or some number like that. So it's a very high grade mine. And one of the higher grades in Canada for sure, not necessarily the highest, but in the higher quartile. And it continues there. We had a press release a week ago Monday, I think, at the Denver Gold Show where we have a potential new zone we discovered, grading about 14 grams a ton.
That's exciting.
It was very exciting.
Now, how are your cash costs looking for the rest of the year?
Our cash cost, absent some abnormal operations, which we don't think, should reduce a bit because I'm going to go from 700 tons a day to 1,000 tons a day. Same answer almost.
Right. And you're planning to double the mine throughput by 2016?
Well, I don't know if we can double it or not, but we can dramatically improve it. Where a lot of our improvement is coming from, we have a Mishi pit, which is 2 kilometers from the mine. Okay. It's an open pit, grades a little above 2 grams a ton, which is pretty high for an open pit. And the former management was actually mining it up till sometime a year ago. And we had to stop that because the mill could not keep up with the throughput because it was only doing 400 tons a day. So we ended up, when I joined the company, a stockpile of some 95,000 tons broken next to the mill. So there's no point adding to it.
Right.
So we have that down to 30-some thousand tons today. And we will start the open pit again at the end of October based on our current estimates. So that'll add a lot to our throughput. And our costs are really low there. I mean, we're mining it for like 40, 50 bucks a ton, which is substantially lower than what we are in underground.
Now, let's move over to drilling. What kind of results are you seeing right now?
We're seeing excellent results. At the Mishi pit again, the pit model that we're currently working with is about 300 meters long. Drilling this year has extended to 300 meters to the east and 300 meters to the west, continuing the same grades on 25 meter centers. So when the winter drilling season comes around, because it's in the swampy bush area, we're going to extend that farther. Our strike length today is 1 3/4 kilometers, a fairly long strike length. And at current production, if we were doing 1,000 tons a day at the Mishi pit, we would have almost a 10-year life there today.
Wow, okay.
And the underground, we'll continue further exploring on this new zone that we just discovered.
Do you have a name for it?
We're calling it the 7 zone.
7 zone, okay.
Okay.
Is there a story there, or?
No, it's a parallel zone to the 8 zone, and the oak crop was known some 20 years ago but never followed up on, and we actually hit it at underground while we were looking for drill bays.
Really?
And we ran into it by accident.
A happy accident.
Happy accident. So we're actually back there next week because we had to take a week break after the Denver show and now we're back at it next week to prove it out.
Now you have about 13 million currently in the bank. How do you plan to use the capital?
We'll use a lot of that capital to exploration, and we'll update some of our mine equipment, which needs some updating. Obviously, over the time it's been let just wear out. But we're also opportune in the market. We had a budget of some $800,000 this year to replace equipment that we didn't replace with new equipment because the David Bell mine over in Marathon closed up, and we were able to get about double the equipment for the $800,000.
Oh, that's fantastic.
And the best part was we got the operators to go with it.
Wow.
So it was a
deal.
double thing. We'll continue to invest money over at the Kena project in Val-d'Or as well, which is currently on care and maintenance. And we just finished the drilling program. We don't have the results yet, but we haven't abandoned it.
Now, what should investors be looking out for in the next 12 months?
I think the investors should be looking for more of the same. We will become more profile in the marketplace with Lindsay on our team, and our results should continue to be equal to or greater than what we've produced over the last year. So I'm pretty excited about the future, and I really want to get back at the Kena project now, seeing the Eagle River project is kind of under control.
Excellent. Well, thank you so much for joining us today, Rolly. It was a pleasure.
Well, thank you very much for asking us. We appreciate it.